Welcome to another episode of the Scottish Property Podcast. My name's Nick Ponte. I'm here with Stephen Clark. How you doing, Stephen?
Good, mate. How are you?
All good, thanks. Yeah, really enjoying the networking events. Last week we had another great one. You came through the one in Glasgow and it was...
Yeah, loved it. Loved it. It's brilliant. Such a great room, good atmosphere. Just such a diverse mix of people that I was actually, because of Nicola Sturgeon's announcement the day before, I was kind of anticipating not going to any single network event, thinking it'd be doom and gloom, but you did a great job, mate, in curbing the doom and gloom and keeping it all positive, and it was a good night.
Yeah, property is still the number one in building your wealth. Number one way of building your long-term wealth.
Absolutely. What's been happening in your business?
Yeah, we're all right. I mean, like, rents are still going crazy. What's happening now with this latest Nicola Sturgeon announcement is that any new properties that we've got coming on, landlords are really ramping up the rents. And, you know, like previously, they'd take a more sensible approach. But now, because that power's been taken away, then, you know, landlords are like that, well, just get as much as you can, which ultimately is going to have the total opposite effect of what they're trying to do to protect people.
And this is what happens when you interfere with a market like she just did. You've just interfered with a free market, and you know, there'll be a lot of landlords out there that won't put the rents up at all, but now they're going to be forced to the minute they get a tenant to change over to try and maximise as much as they can to make sure that if the power's taken away from them, then they've safeguarded their investment.
100%. Yeah. We also brought the audience in Glasgow an exclusive, which we're going to announce to the rest of the audience and listeners as well. Stephen, tell us what's happening.
So we're going to have, we just thought we spoke about this quite a bit, and we've really enjoyed the community being getting built the last few years, and then obviously the last year we've been putting on the networking events, which are such a great success, and everyone seems to be getting a lot of benefit from them and building relationships up and forming some business acquaintances and doing stuff. So we thought, let's take it one step further and let's host a Christmas ball, end the year bash. Let's all get together, everyone from across Scotland. Doesn't matter what stage you're at in your property journey, where you're at, if you're a property professional, been in the game for years, or you're just starting out, let's have a party. Let's make it a more informal, get dressed up, some 3-course meal, some live music, a DJ take us to a party where Nick can have a dance off with people, and you can all go against your TikTok moves, see who's got the best ones. And yeah, so we thought we would go for it. Scottish Property Podcast, Christmas ball, Saturday the 3rd of December, and the Village Hotel in Glasgow.
I'll do the dance off and you're dressing up as Santa Claus. Can't wait, guys. Really looking forward to this. It'll be great to see everybody. Let's make it a real good party. Bringing you on to today's episode, we have Dee Ludlow, who has been on the show previously before. He's like an investment expert, talks about all different types of asset classes, investment, crypto, stocks and shares. He buys businesses as well. So it was interesting. I mean, like he went on the show and said that he's not buying any more property at the moment. So he doesn't recommend buying residential property, but it was really insightful about what's happening in the general macro economy and interest rates, inflation, all the rest of it. Stephen?
Yeah, we covered a huge amount. We covered inflation, what it's doing to the economy. And like I said, we asked him what his investment strategies are right now, because he does pay attention to not only the macro economy in the UK, but more so in the US, because, he thinks that what happens in America kind of comes back over to the UK 6 months later, a year later. So yeah, he said that he's going to diversify in his strategy right now, and he's buying businesses and not residential property, and he might pause it for a few years, but he says it's just a way, changing with the times at the moment. So it is a really, really good chat. It's great to have him back on.
Excellent. Always love listening to what Dee's got to say. So without further ado, we will cut to the interview with Dee Ludlow. Okay, I'm delighted to welcome back on the show for a second time to the Scottish Property Podcast, Dee Ludlow. How are you?
Awesome. It's good to be back.
It's like by popular demand, mate. Yeah, we were talking to quite a few people at the we do monthly networking events now that we're back out of lockdown since last time we spoke, and you were like talking about what guests you want back on, and your name just keeps pinging up constantly. Like, this is a property podcast. I think we spoke more about cryptocurrencies and the economy than anything else, but yeah, it's good to have you back on.
Yeah, and I appreciate you guys.
Anyway, I mean, we're not short of stuff to talk about on this episode, Dee. We are in a crazy time in the macro economy. We have record inflation, crazy energy crisis going on. Property prices are still crazy. Don't see anything happening there yet in terms of a downturn. But try and give us a bit of a summary of, how you are seeing things play out at the moment. What are the kind of main factors at play just now?
Yeah, so I think that we don't fight the Fed, right? So, regardless of whether in the UK or the US, the Federal Reserve play a massive part in global markets, global reserve currency, etc. However, Jerome Powell has said that he's open to another reserve currency of some sort. So we're already seeing the power start to shift. And I think that is what's going to happen. I think that we talked a little bit about on the last one, we're going through that sort of financial paradigm shift where there is a new system. Every so often this happens. Technology moves forward, debt cycles come to an end, whether the debt gets restructured or we go into a recession. This is just part of cycles, right? I think everything they've done up to now, of course, inflation is a lagging indicator. It's great in hindsight to say that they should have acted quicker. I think they should have acted quicker. I think it was pretty obvious from all the stimulus that was going on in 2020 that and the helicopter money that at some point we was going to have some sort of inflation. The thing is with inflation is consumer price inflation isn't just about just general stimulus. It's when you give fiscal stimulus and you give it to people, that's what can generate consumer price inflation. So I think that all that played out as expected from some of the macroeconomists. Like I said, central banks work off lagging indicators. They're more reactive than proactive. And now they're trying to tackle it with raising rates. We've seen quite a few rate rises. The inflation numbers are coming out again today, the year-on-year numbers in the States. They're looking to hike another 75 basis points, which they probably will. But I think personally that inflation in general CPI terms from what they will show us has probably peaked. So I think we're going to start to, especially in the US, I think that's what's happening. But I think, look, if the Fed wants to, when the Fed's printing money and they're creating a very inflationary period with credit expansion, you need to go with them as an investor. So that's when you buy your property. That's when you buy your equities, your crypto and everything else, because you don't want to fight the Fed. Now they're looking to tighten and they're, raising rates and they're trying to have a bit of decline in economic growth. You don't fight them again. There's, of course that you're in markets for the long term. And I still think that's how people should look at it, but you don't want to fight them. So if they're trying to tighten and if they want to put us into an actual full-blown recession, they will. And if that's what they think it needs, they'll do it.
Do you think that there needs to be a recession to bring down this inflation?
I think it's not so much the inflation. I just think we need a recession or some sort of reset.
To reset, yeah.
Go again.
What do you think the real inflation's at? Well, particularly in the UK. Do you think it's as reported, or do you think it's higher?
Well, no, it's definitely higher. There's not a conspiracy theory. Economists will blatantly say that the CPI gets manipulated. So an example I usually use is if a packet of salmon starts to get really expensive, they'll just replace that pack of salmon in the basket of goods with something that's less expensive, like a tin of tuna or something. They'll just do that stuff to manipulate the price. So the inflation figures. So
I guess it really depends what you're buying, doesn't it? And that's the bottom line.
And they've moved stuff in and out of that basket of goods over time to make sure we stay at that 2% inflation figure that gets reported. So where I really think is that I think is definitely above 20%. It has been, and if it's still there, maybe higher. It's hard to really say. Like when you start to see, like the thing is with inflation is when the general public start to really see the cost of living affect them, that's when it's not in a good place. So when we're at like 4%, 5% inflation, in general, it's not too bad. We can deal with it. And then when it starts to get to double digits, people start to feel it more. But the funny thing about this is you see the price of wages. So wages has had its biggest increase in however many years, like 20, 30, 50, I don't know how many years, right? But you've technically taken a pay cut because inflation they're still not in line with inflation. So people think they're getting paid more in some elements, but they've taken a pay cut in real terms. So it's a very weird time.
Yeah, so like in real terms, we're actually worse off. Even if you're getting 5%, which is, traditionally that would be quite a good pay rise. But in this inflationary environment, that's still, in real terms, in real money, you're still going to be worse off. Yeah.
Yes, it's a weird time. Is like when you look at so people talk about the wealth poor gap divide, and it's getting bigger and bigger, and it is. The thing is, we try to rely on humans doing the best thing for humans, right? But we know at the lowest level, people are greedy, and they will take more and more and more. So there's people, for instance, that they say, oh, why would people lie to us? Why wouldn't they have our best interest at heart? People lie to their own children people lie to their own family. So to think that the government and central banks won't do things to benefit themselves over others, they are greedy, and the wealth poor gap divide will get bigger. The rich will get richer, the poor will get poorer. That's the system that we live in. For instance, Apple's current market cap is equivalent to the bottom 180 companies in the S&P 500. Apple's market cap alone. This is insane. We're talking the top 500 companies in America, and one of the market caps bigger than the bottom 180. In what world? Now, I'm not one of these people that are saying, with the energy prices, for instance, I know we'll get onto it in a sec, but with the big companies, are they're making crazy profits and all this type of stuff? I'm not one of those people who are like, we need to take the money from them and cap them. I'm not saying that we can't do that. Maybe they can give back, but I'm not advocating, let's tax them more and more and more, because people that run businesses understand that if you see opportunity to make more money and expand and grow, you're going to keep doing it. It's not a case of like, well, look, I don't think that I should make any more money. People will always try and make more money. That's how businesses grow. In my opinion, in this situation, you see just on the price of fuel, for instance, the government tax it 45%. So who should be obligated to work on that price being affordable for the general public? Should it be the government, who apparently have our best interests at heart, and they're the ones that police the system financially and legally, or should we rely on a company doing it? So it's all good saying, when people say, "Oh, tax them more, cap what they should earn," but in my opinion, if the government's taking 45% of every liter of fuel or whatever amount of fuel you buy, then surely they should be the ones who take the haircut. Now, and it's a weird time, because a lot of our natural resources become privatized, and that's the fault of our government. Even our water, for instance, our water got privatized and sold off. So I think it was an Australian company years ago. So, you can't sell everything off and then later down the line start moaning about it when you're not in control of it anymore. And again, it's that kicking the can down the road, not taking responsibility or accountability for it, and then trying to tackle the problem when it comes.
Is it because governments are only in power for a certain amount of period, like they're only in 4 or 5 years at a time or whatever, so they don't really give a shit about this stuff because they can kick the can down the road, and they're not going to take the beat, and they're not going to be the ones that's heads on the plate. They'll kick it down for someone else down the line.
That's the biggest problem. No one wants to do it now because they know that they won't have a good term. They don't want people to look at them in a certain way. The problem is in the US and the UK right now, massive changes need to happen to push this into more of a better, make this a better position for us down the line, but no one's willing to do it.
I mean, let's talk about that for a second. So when it's like, this is called fiscal stimulus, is that right? When governments intervene, start handing out money, is that fiscal stimulus?
Yeah, so that's when that'll go into the pockets of, say, us.
Yeah. So this latest thing about the energy, like obviously like the energy prices were going up crazy. They had to step in. The change of prime minister, what's her name, Liz Truss. That was the first thing that she stepped up and announced, was that there's going to be, a freeze on these cap increases. So that they've capped it at the October rate, is it, or 2,500 or something for an average household or whatever. But I read a stat that all this is going to cost us £200 billion, and this is going to be added on to the national debt. So, like you said, they're kicking the can down the road. I mean, I read that like 70 billion was the cost of furlough, 200 billion. You're just like, where does this all end?
Well, when you think about, I think I mentioned this last time, but when you think about 2008, right, when Wall Street got bailed out by the banks, we was talking $800 or $900 billion, right? There was protests in the streets saying you can't bail the bankers out. In the COVID crisis, we had trillions of dollars printed and put into the system. No one batted an eyelid. No one said anything. And this thing with the recent, with Liz Truss now being the PM. Now, I'm not a big fan of her or Rishi, right? But some of the comment, I don't even follow this stuff because, in my opinion, it doesn't really matter who it is. But I've seen a few comments that Rishi said, and he was trying to say that this, by her doing what she's done now, is going to affect the country down the line. So you need to put, which, you know, coming from his background, he probably understands how finance works a lot better than she would now. But it was easy to win votes if you say, I'm going to help you now, because the general public don't care about down the line, because they're like, that's your problem. They don't think that's our problem. So they're like, we'll just deal with it then. But for now, I need money now because it's affecting me now. And no one wants to delay the gratification. Nobody wants to do that. And it's one of the main reasons we're in the situation we're in now, because the debt cycle has been pushed so far down, kick the can so far down the road. It's like, how do you solve this now without having a total reset in everything?
Would they not really encourage huge inflation then to erode away that debt that was just a massive?
Well, inflation can erode away debt. That's why they try and keep it at their magic 2% number, because then they can eat away at the debt nicely. And when you've got debt over a long period of time, 20, 30 years, that'll erode away the debt. The problem is when inflation gets a lot higher, that's when we have problems. And that's when debt repayments and stuff have issues, because interest rates need to rise rates to bring down the inflation. You rise the rates, what happens then? We've already seen credit card debt is as high as it's ever been. This is what people are now going to take on more debt, but debt they can't afford. And this is a thing where central banks basically have two levers that they can pull. One is the print money lever, and the other one's raise rates. The problem with this situation is, how do they fight it? Because they've printed a serious amount of money, and now they've raised rates. And inflation, you could argue maybe the inflation numbers come out today and they've come down a little bit more, and you could say that they've tackled it to somewhat, right? But the cost of living is still unaffordable for people. Otherwise, they wouldn't be putting money on their credit cards. So this is the situation where they've created a huge problem and their solution isn't as effective as they need it to be.
See, historically, I know you'll have looked into this, when we have huge inflation like we're having now, I can't remember when, I think we looked at back in, I'm sure it was like 1978, like 1980s, there were inflation like this. What historically happens in the economy at the back of it?
So what at the back is something like this?
Like huge inflation, like historically, like previously, when inflation's been as crazy as it's been.
Well, let's look at the current day, right? You've got Argentina, you have Turkey, you have Venezuela. Look at, if you want to go back as far as we can go back as Zimbabwe, but if we look at the current countries that are experiencing ridiculous inflation now, what happens is people start to use other money because their money is unsustainable and their money isn't worth anything. I think Zimbabwe had 100% inflation rate daily. So you go to buy a pint today at the bar and tomorrow is double the price. And so all they do is they go to another currency, because it happens all around the world. Like if you go to the Turkish lira now, why would you use that in Turkey? If you may as well go and use euros. And that happens in Turkey. You know, people use other currencies because they're more stable. So the problem that we're having now, especially the dollar, for instance, the pound isn't great. It's very weak right now. But let's look at the dollar. The purchasing power has just been in free fall for so many years. So, you know, the dollars in your pocket today is less than they were for the equivalent 5 years ago, 10 years ago, 50 years ago. So when you have a look at things in real terms, it's like, what's the true value of these items that we're buying right now? Because the easiest one, we're on a property podcast, so it would be a house. You know, you're like, oh, my grandma bought a house for 20K, is now worth 100. It's like it is in today's terms, but you know, if you actually work your way back, is it just the equivalent? As they're appreciated, and of course they're going to appreciate, and housing market has been known to beat inflation. That's why people invest in houses and keep them, because they appreciate over time. But when you look at the current housing market right now they say the term on is, if someone sneezes on Wall Street, someone in the UK catches a cold, right? Because things usually happen there first, and then 6 months later, 12 months later, or however long it happens here. The same thing happened in pretty much every previous recession or historic event in the financial system. Now, if we look at the US right now, the real mortgage payment on a median household in the US now is 10% higher than it was in 2007, right? The supply of new homes in the US right now is actually its highest since 2008. And I think there's like 5 or 6 million houses that aren't even in their current mortgage payments in America right now. So with these rates rising, the cost of living going up, people are struggling to afford to even pay to keep a roof over their head. But you're not going to see this in the media, because all you see in the media is the housing market is still buoyant. It's still buoyant. Well, okay. And I also seen yesterday the Bank of America talking about a 0% mortgage now, 0% deposit from mortgage in the states that they're about to launch. Now, in the current market,
isn't it?
Yeah, like what do you expect is going to happen there? Yeah, this has all happened before. So why anyone would sit in a room, and the reason why is because the money that they lend you, doesn't exist. And people go down the conspiracy theory rabbit hole with this, but this isn't conspiracy theory. The fractional reserve banking system is real. You know, this isn't a conspiracy theory, but people would like to think it is. That the money that they lend you to go and buy a house doesn't exist. So if you default on that debt, again, like a free asset, basically, of course, sits on the balance sheet as assets and liabilities. But this is why they do this. So that's why Bank of America have decided to do this. But in my opinion, it's like, again, are we just going to keep doing the same thing over and over again and expecting a different outcome?
I mean, like, there's so many things going through my head. One of the biggest things is, you know, there's all this talk about US already, like, technically in a recession, because it's like, what is it, 2 quarters of negative growth or something like that, right?
They're calling it a technical recession this time, so it's not a real recession apparently, even though it always has been. But yeah,
right. So getting on to my point about, you know, that's the kind of technical indicators there, and you know, who knows whether it'll actually really play out. I'd be interested to say, like you say, about the data getting released today. Have they got a handle on the inflation? You know, how far do they need to rise interest rates and all that? But over in this country, like, I think we've obviously got a more serious problem with the energy, haven't we? But at least for me, it just seems like there's still not really a lot of people struggling at the moment. Like, do you think that, I mean, if you look at the unemployment rate, that's still pretty low, isn't it? I mean, is a recession really going to be felt when people start losing their jobs? Are companies are we going to start seeing like big layoffs soon? Is that going to be what's going to happen once some of these businesses start folding because of the energy costs and this, you know, unsustainable inflation? What do you think? How do you think businesses are going to pan out?
Again, so first of all, unemployment data is also flawed, because again, this is another piece of data. I think we've seen that data gets messed with over the last 24 months more than we would think. But the unemployment data, so if your class is on job seekers and you're looking for a job, they class that as part-time employed in the data. So how do we know really where unemployment rates are really at? It's ridiculous. Secondly, I was listening to LBC about 2 weeks ago, and there was a guy on there, and his company distribute like seafood to some of the like the very luxurious restaurants in the UK. They've been going for 40 years, and they employed 1,000 staff in the UK. The guy called in, he's like, this is a company that's 20-30 million in revenue a year with almost 1,000 staff. And he said a few weeks ago, he shut the doors because it's impossible for them to suck up the cost of energy rising that much. He said, we can eat up a couple of percent, but you know, hundreds of percent is impossible. They've now moved to Holland. So they moved the entire distribution to Holland because they capped the rates over there. This is before they capped them here. So you're talking a company 40 years, 40 years history, laying off 1,000 staff. So it's already happening. The problem is another lagging indicator. These are all lagging indicators that which come out later on. So we don't even know to the extent where it's at. What we do know is if you look at the universal credit system, they're already giving people cost of living payments. Whether they need them or not right now, we don't know. But you know, they've already started giving them, which will lead eventually to an entire universal basic income, because it's how are people going to function if they can't afford general basic things. And when it comes to rents, if you have a choice and you can't afford to pay both, do you pay your rent with? We know that landlords don't get the fairest chance of evictions
Well,
already.
especially in Scotland now, because they
Yeah,
banned the evictions and they put
Well,
rent freeze on.
Exactly. So, and I've had some serious issues with tenants myself over the past 18 months, right? So we already know it's hard enough for landlords, right? I know most people don't like to hear that, but it is hard enough for landlords. Now, when it comes to, look, do you want to pay your bills? I know apparently they can't really turn your electricity and gas off, but they do. But apparently they can't. Are they going to pay to keep their house warm this winter, or are they going to pay their landlord, or they know they got a minimum of 6 months? And that was 6 months from the time you start the eviction process. And when it happened to me, I kept giving them the benefit of the doubt because they kept saying this month, and then you don't want to start that process because there's a minimum of another 6 months with no rent. So this is going to be a tricky situation. And which one are people going to decide? Do I pay my landlord? He or her, she or him can wait, or do I make sure my heating's on this month? And that's the situation.
I can basically, pay for the shopping to feed my kids. I mean, it sounds harsh, but that's basically the decisions that people are going to be making this winter. I reckon. I totally agree.
There's no serve another purpose and where you put your where you have your portfolio going. Like we've spoken about this before, like low quality assets or high end assets. Like do you want the low hanging fruit with the tenant demographics that are on that breadline that are so close to that line, or do you go for a higher end property where it's a bit more cash required to get moving, but you've got you've possibly hedging your bets for at least your rent getting paid going at a difficult time?
Yeah, so for me, your listeners probably won't want to hear this, but I wouldn't be buying property right now. For me, I'm not buying property, right? Well, technically we are, because we buy businesses and there's property attached to those businesses, but I'm in control of who pays the rent, so then I don't mind. But because it's us, but I'm not out there looking to buy residential property right now, and it's not because it's not a good asset. Nothing to do with that, right? It's because we don't know where this is going right now. We don't know how this affordability of the cost of living, we don't know where it's going to go. And I do think the UBI is going to come in, but who are they going to, who are they going to be focused on? Because people like ourselves that maybe own assets and property, we're not going to be the ones causing civil unrest in the streets. So maybe, but probably not. The people that, really, really need the money right now, and not that we wouldn't, but it could cause civil unrest. So who are they going to take care of? And that's the situation we're going to be in. So I personally wouldn't be buying property right now. And anything you are buying, you need to take a long-term approach. The reason why we buy businesses is because we buy income, and we can structure the deals in a very creative way where the ROI is very, very good. So, that's for me right now. And the thing is, a lot of wealth gets created in a recession, right? You can recruit the best talent and a lot of wealth gets created. So, they say when there's blood in the streets, you should buy. And I think that if people have the opportunity to do that, and, you're fortunate enough to have some capital on the side, then do it. But you also need to manage the downside and the risk, which I feel a lot of people don't. A lot of people don't do that. And they,
what's the big risk now with buying businesses with kind of rise in energy prices? You making sure that the units that you're buying are all fixed in for a few years and that kind of stuff, or is that part of the appraisal process, I'm assuming, on a business?
Yeah, exactly. So it has to be factored into the projections. It has to be factored into the entire deal. So it wasn't something we was looking at until quite recently, until it started to get slightly out of hand. So yeah, of course that's a big problem. So that's something we have to just factor into the deal.
It's an interesting point. We've been chatting about this as well, like what's coming first and with the economy, and because the price cap wasn't on businesses and commercial properties, it looked like the businesses were going to go to the wall first. And obviously, from my point of view, it looked like then people would be losing their jobs, and then your residential was taking a knock-on effect. But are you seeing that as an opportunity right now, whereas the businesses might be the ones that are failing first, or need the bailout, or need to be structured or bought over, or rather than going bankrupt or going to the wall, that there's opportunities there before residential might be a couple of years down the line?
Yeah, so for me, again, it's all down to income as an investor, right? And the ROI on a general buy to let isn't the ROI can be good depending on how you do the deal, but the income isn't amazing, right? Whereas a
Yeah.
business, you can buy a couple of $100,000 worth of profit for very cheap considering. So for me, yeah, the opportunity is the big opportunity is in, for one, baby boomers are retiring every single day, and they will be for the next, I think, 6 or 7 years. Thousands of them, and a lot of them make up a lot of the businesses as well. Now you can buy a business with 20, 30, 40 years history that survives stuff like 2008. So they've already managed to get through something of that degree. So you can buy tons of revenue, tons of profit, business with a great infrastructure and management team. Of course, there may be cutbacks, but these people have just gone through. They've been through one recession. They've just gone through COVID, which most people didn't want to go through that and didn't know where their business was going to look like coming out the other side. Do they now want to go through something else, something similar in such a short space of time when they probably just had the best financial year ever in 2021 because of all the demand? And that's why I've seen almost every business we look at have had the best year ever in 2021, and now next year's forecasts are absolutely ridiculous because they're like, yeah, this is normal now, and it isn't. And so yeah, that's where the opportunity comes.
So what are you doing when you're talking about buying businesses? Is this what you're doing now then? What are you doing?
That's what we've pretty much always done, but it was I know last time we talked a lot about crypto, but that's our core focus is now. It's just moved directly
All
to
right.
that.
Okay. So what can you give us an example like of any businesses that you bought lately or?
Yeah, so we've just recently completed on an e-commerce business. So they sell like sliders and socks online. That was, I know people talk about no money down deals, but that was actually no money down. We used the bounce back loan in the company as the closing payment, and then we took over the company and deferred the rest of the payments over a period of time. We're in the process of buying a civil engineering business. That one does 8 figures in revenue. We're buying that with the closing payments quite high, so it's like $1 million closing payment. But with the finance facility that we're using, we have to put about 100K in. But then you're putting 100K in to get something that does $1 million in profit a year, or over $1 million, and 12 million in revenue. We're also in the process of buying a nutraceuticals company in the States. This has been going on for quite a while, this one, but again, there's deep 8 figures in revenue, a ton of profit.
What did you say? Nutraceuticals.
Yeah, so they make like formulations, so like supplements.
Right. Oh yeah. Supplements.
Yeah.
All right. Okay. Cool.
So yeah, that's the type of stuff. They're the ones that we're focused on at the moment, anyway. But yeah, we've bought construction companies. Yeah, a variety of different businesses. Yeah.
And if say I was looking at property and now I've listened to Dee Ludlow and the Scottish Property Podcast and I'm like, no, I'm not investing in property anymore, but I've got £50,000 in my bank account. Where would you, I know you can't give financial advice and we don't give financial advice, but where would you, if it was your money and you had £50,000, where would you invest it?
Business. I'd obviously, you have to
Seems
definitely
too complicated for me. I just can't get my head around that. So you buy businesses, but then what do? You just leave them to run as they are, or do you have to go in and sort them out because you obviously got them at a discount? The reason you got them at a discount is they're not maybe doing very well. How does that process work?
So it's not so much about getting them a discount. Some of these are very motivated people, just like some of the property discounts you get, right? Sometimes you think you've had a complete steal, but really, it's just that's for the markets. That's just what the market says it's worth at the time. And in business, it's only worth what someone's going to pay anyway, right? So we contact people completely cold. We don't really approach businesses that are up for sale. You can do it that way, but we don't. And yeah, the 50,000 could, it's hard to say depending on what facility that you use and how far it can go. But for 50,000, you could pick up something giving you 150, 200K net a year quite comfortably. Of course, it's not as straightforward as that because, it's just not as easy as just having the business, never checking in and having the money. We're not buying stuff that we're going to own or operate, but we want great infrastructure. Like I said, good management team. We need the systems and processes to already be there. That all comes with the history of the business and the length of time it's been going. But look, when you have a startup, you don't have no customer list, no brand, no money in the bank, no income, nothing, no systems. It's very hard. So if you can buy an existing business that already has all of that, then it helps. But yeah, you still have to check in with management team. You still may have to do work. It's not a case of just never doing anything. Just
If
like
you
your
wanted
property
like, if you wanted assets, if you want investments, like, are you, what's your view on the stock market now? Because obviously you talked about Google there earlier on, and like obviously they've wiped quite a bit off, haven't they? They took a bit of a dive there. All the tech companies and that, which a lot of your pensions invested in and all that, that's taken a bit of a, and maybe, I don't know, maybe more to go as well. What's your kind of view on that?
Yeah, I think that the big tech companies, they're not going anywhere, in my opinion. So yeah, I think that, if you can pick some discounts up on some of the big tech companies, yeah, they're gonna taking a long-term approach on it, which I think people should, especially in the stock market. Then yeah, you definitely deploy some capital there. Depends if you want income or if you're looking for capital growth. Like people look at Bitcoin now and say, oh, crypto's in a bear market. Yeah, but Bitcoin's still up 460 something percent since the COVID lows, still outperformed pretty much every single asset. So, it all depends on your risk appetite and time horizon on any investment. So, but there's opportunity everywhere right now. In times like this is where the big opportunity is. But what people try to do is they try and time the bottom and try and time the top. And that's when things go wrong, because some people chuck all their money into Bitcoin now at, what's it today, like 20 odd K or whatever. And then let's say it dips to 17 or 16. They're like, oh, when's this going to go back up? Yeah. And it's the same as stocks. It's impossible to time when these things happen. You just got to, understand your time horizon and risk appetite. That's the basics of it, really.
Yeah, and you promote like the dollar cost average, kind of just putting into it regularly, whatever you can afford, a chunk of what you're looking to invest, just keep putting into a certain asset class or diversifying, don't you?
Yeah, definitely. Yeah. I think that's the way to approach any asset.
Yeah. Talking about the business a bit, how do you attract deals like that then? Is this there's stuff that comes to you through your network and
so it's your deal flow. So like the way you do your lead generation, we've tested so many different strategies, and we managed to pull one together that's working very, very well, and has for about 12 to 18 months now. So we reach out cold, but we speak to so many business owners. Is unreal. It's not a case of like, this is all about volume, and it's impossible to say like how many do you talk to till you get a deal. It's literally no metric you can follow. It just, we've had some people in our group that, as their first ever batch of letters, they sent letters out. The first batch of letters that they sent out, they got a deal off the back of it. And then we've got others that have probably gone through, 10,000 leads and they don't have a deal yet. It's just, you just got to be active, and it's not a thing that is not passive. You need to be active doing this to get a deal done. But we're looking for the deals that are life-changing deals, not the ones that are going to be hard work and you're going to be in them, working in them every day. We want stuff that changes, that can change your life. Yeah.
Sounds good. And then do you joint venture with a group of you guys that kind of bring in different skill sets to the table that can obviously acquire the business, but then grow the business as well?
So we've got our own sort of, our company has multiple people involved in the company, but some of the people in our mastermind group, if they bring a deal to the table that we offer them, we will partner on deals if it fits our criteria. So the civil engineering deal is one that a guy called James has brought to us in the group, and he's asked us to partner with him. So it fits our criteria. So we'll partner with him on the deal. We'll find the funding, and then we'll work with him post acquisition to ensure the growth stays there, and make sure it maintains what it's currently doing as well, which is first and foremost the most important thing.
Where would you say on the terms of, like, you talk about risk a lot, in terms of like a kind of risk gauge, like buying businesses for, investing and stuff like that, where does that lie in risk at this moment in time?
In my opinion, is the lowest risk of all, because you're buying something which has been tested and proven over decades. So of course the risk will lie in, can it sustain the way it's been growing, or if they've just been farming the business. Of course, all of those things. The biggest risk to buying a business is maintaining the culture in the business and the integration between the communication between you and the management team. That's the biggest risk in my opinion. And then there's obviously supplier risk and customer risk, that, you know, maybe there's personal relationships that people have had that needs to transition, but you always put in a transition period between previous owners to yourself, and that length of time depends on how long they want to stay in it, and also how long you need them to stay in it to make sure the transition goes to plan.
And how are you going about like getting the funding for it? Is it private invest? You know, is it private capital or is it bank funding or?
So yeah, so both. We use both. So you know, we'll use bank funding for as much as possible, and then if we need a shortfall to bridge the gap, we either put our own money in or we use investors' money as well. But for instance, the ROIs you can offer investors are very different to everything else. You know, like the civil engineering deal, for instance, after all finance costs and deferred payments are paid, you're talking about 650k left over per year. So if you need to bridge that 100k gap with an investor's money, if you wanted to do it, you could offer them 100% ROI in a year if you wanted to. Of course you don't, but you can if you want, because of the amount of buffer that you have there with the excess profit.
Good, mate. Really interesting. Really interesting.
And a lot of people panicking at the moment, obviously with the interest rates rising. You know, there's talk about, I think, well, you talk about the Fed quite a lot, but they did, I know they were slow to react, but then they went pretty fast, didn't they? And pretty, you know, 0.75, 75 basis point increases and all that, where we're kind of fiddling away with 0.25 and 0.5%. Where does the Bank of England need to go, and what do they need to do?
Yeah, if they want to tackle inflation, they're going to have to raise slightly more aggressively. But the only way out of a recession is economic growth. But you can't, in my opinion, in the current market, it's going to be very hard to grow in the situation that we're in. So we need to pull back slightly. It needs to be some sort of reset, even if it's minor, even if it's a very short like recession. We need something to then stimulate to start growing again. That it's going to be very hard to grow out of a cost of living crisis. And
this is when they talk about this word stagflation, isn't it? Because stagflation, no growth, high inflation.
Yeah, exactly. And that you know, people are talking about potentially a decade of stagflation, which, you know, in our lifetime, because we have been lucky enough to have tons of credit expansion in a very inflationary environment where asset prices keep going up and wealth is just generated out of that. People are like, that's never going to happen. But, you know, when it's happened before, people probably thought the same thing. So, you know, it's gonna be an interesting few years to see how it all plays out.
So I'm looking at my wee buy to lets now, and I'm looking at, like, you know, say, I can't even think where the interest rate is. The base rate, Bank of England base rate, I think it's about what, 1.75 or something like that at the moment. Some people are predicting that it's going to go to, like, you know, 4% or something like that. So I'm looking at my mortgage rates and I'm thinking, well, what if they go up to, like, you know, 6-7%, maybe even 8%? I think once I get to like 8% on my buy to lets, the cash flow literally, like, you know, just breaks even. Like, I'm not making any money at all. So, but that's like, could happen, couldn't it? You know?
Yeah, well, I have we refinanced. It was like an old chapel converted to a house and 2 flats, and because of the flying freehold, creeping freehold, and all the other stuff with it, we just find it very hard to refinance onto a mortgage. So in the meantime, we just refinanced onto a tracker mortgage. Now this is like 6 to 8 months ago. Haven't looked at it since. That mortgage is only a small mortgage, but, you know, that's gone up. I think it was about £500. Is now just under £700 because of all the tracker mortgage on the base rate.
Yeah.
You know, we're good because we've obviously got 3 units, so it's fine. You know, there's a lot of buffer there, but at the same time, how many people haven't got that buffer there? And then, you know, how many people, for one, the general the cost of living going up in their day to day, have they got the excess money to put in to bridge the gap on the shortfall of their mortgage payments? And, you know, we don't know what's going to happen, but these are the types of things that people do need to consider. Because
I think the last one that I fixed in it was 4.29% or something, and that was for 5 years. So, you know, at least you can do that at the moment. It still does, for me, it still makes sense, and for me, it's still generating decent cash flow. You know, the plus side is obviously rents are going up as well. So, interest rates are going up, but obviously rents are going up too for me. On new properties, albeit we can't increase rents now in Scotland on existing tenancies. But yeah, I mean, at the moment, for me, it still makes sense for property, but don't know how long that's going to last,
Yeah, I think property is always going to be a good asset. There's a reason why, some of the biggest, private equity firms, hedge funds in the world, banks are getting involved more now than they have beforehand. Oh, you could argue that banks have always been involved. They've always owned some ownership in the property.
Yeah.
But, there's a reason why it's a great asset. But, things change, and it is a difficult market at the moment. And, of course, if you're too cautious, then you're never going to get involved. But I would definitely adjust risk management in the current market, because even some of the world's smartest minds, some of the best macroeconomists, the central bankers, all the data that the government have, they're still struggling to keep up with what's going on and all the different things. So is how are we, as just technically they're classed as retail investors, it's going to be hard for us to keep up with the information that they have to hand compared to what we have.
And you've not talked about Bitcoin yet much in this podcast. So what's crypto markets? You used to put out quite a lot of content on that. Like, are you still involved with that? Like, still invest in crypto, or?
Oh yeah, definitely. I think that it's a huge asset class, and I think that it's going to continue to grow. Is a long way to go for crypto, like I mentioned last time. We got Ethereum's going through a merge now from proof of work to proof of stake. There's a lot of anticipation behind it. Whether, because we're in the middle of a bear market, whether that's going to make a massive difference to price action, we'll see. A lot of the time when these things are anticipated, it gets priced in the market, just like a lot of inflation and rate rises have been priced into equity markets. But yeah, I think there's massive opportunity in crypto going forward. I think the next sort of trends going into the next bull cycle, they're probably going to be more linked to real world use case of NFTs. We've already NFT mortgages and just land registry, like that type of stuff needs to be sorted ASAP because it's so old school. There's these things called soulbound tokens. So Vitalik, the creator of Ethereum, talks a lot about these, where they can be used for sort of like employment history, accreditations, maybe university. It's more about proof of character instead of proof of wealth, where a lot of these NFT JPEGs are like proof of wealth. Look what I have, $1 million NFT. This is more about proof of character of who you are. Probably the social graph stuff where you get to control your data more. We've seen a lot of the stuff for people getting cancelled and a lot of data gets moved around. I think that type of stuff is going to be big. There's another one called ZK rollups. So these are probably going to be used. A lot of the slower networks find it hard to scale, especially keeping the security of the network. I think they're going to be pretty big. But overall, anything in line with the carbon footprint as well, that's massive at the moment, right? So I think any project that's in line with that and real world use case for that's going to be big. So I think there's a long way to go with it, but a lot of crypto has been exposed, especially the DeFi stuff with like Terra Luna. I don't think many people expected that to happen. So I think it shows the infancy that crypto is in and how premature it actually is. So, if anything, from the positive side, it shows how much potential and growth still there. But, when you start to see some of the biggest institutions on the planet now integrate blockchain into their day-to-day, it shows you the potential of where this could go. So nothing's changed for me in Bitcoin, Ethereum, and crypto as a whole, really.
And then obviously tackling this energy crisis. I mean, you touched on, you think that, we should be taking, or I don't know if you do think this, but, you're talking about state ownership of, energy companies and stuff like that. Is that a route that you think that we should go down? Like, I mean, you see France, I think France bought over EDF, didn't they? Like that's in state ownership.
Well, it's not something that I think we need to do. I just think that my point really was that they sold everything off and then they try and blame the people they sold it to. It's like, well, you did have control at one point.
Right.
Yeah.
What about windfall taxes then? Where did you sit on the windfall taxes?
Probably half and half as well. Yeah. It's like, for me, now I think, there's a big problem with the wealth poor gap divide, but I still think that we should reward success and reward growth, because I think that growth is what, evidently the stuff that we use day to day. If we didn't grow and companies didn't grow, we wouldn't have an iPhone. We wouldn't have all the things that we can pretty much do everything on a phone now. We wouldn't have infrastructure in our roads. And, there's a bit, let's leave that one for another time. The M4 has been worked on for about 15 years, but all the infrastructure we have in our system, if we didn't promote growth, a lot of it wouldn't happen. So I don't think that we should stop promoting growth, but at the same, technology is very deflationary, but I think that if we do start giving the windfall tax, I don't think we should, but I'm a bit undecided with it. I still think we should promote growth and success.
Like you say, there's so many big decisions getting made at the moment which are going to shape like our future and our kids' futures. And like you just worry that the people that are making the decisions just don't have a clue. Do you know what I mean? And like you say about promoting growth and getting out. How do we get out of recession? It's about investment and growth and opportunity and stuff like that. And
like we kind of touched on there, the ones that are making decisions they're not lined up to win. They're lined up to lose from the start, because, like you say, to get in, they have to make the decisions now for the mass population that want answers now, but doesn't help the country's long-term growth. But if they didn't make these decisions, they wouldn't even get in power in the first place. And then to stay in power, they want to try and be known as having a good reign. So they make more poor decisions based on the here and now and not the future again. So the whole system kind of just seems balanced against losing long-term.
Yeah, that's the biggest issue right now. It's just very short-term thinking, short-term decisions to keep
They need to listen to like politicians. They need to involve like business leaders much more, basically, in these decisions. Like they just do it, like you say, for the votes, and they're not thinking about business and the growth and the economy, and they're just purely on a mission for themselves. It's just like, we could rant for ages about that, but let's finish off a bit of property. So like, you're not keen on the property at the moment. You're going business, buying businesses, etc. You touched on the different asset classes as well. You've got built up a group, a community of people. Like, are you seeing any other issues from any of your, members of your community? Is there a lot of fear at the moment? Are people getting stalled because of fear in the marketplaces? And how do you overcome that fear? And how do we end on a positive here to move forward?
So yeah, I think there's a lot of fear. Definitely, people are undecided. A lot of my group are crypto based, so a lot of them are very up in the air on when do they go into the market, when do they come out. Where again, same as everything though, equities, property, everything, right? I think that to end on a high, this is the best time to understand who you are, and forget following other people, forget what other people say. Everyone's different. Everyone's in a different circumstance, right? So understanding what your personal risk appetite and time horizon is, and if you haven't learned over the past couple of months or 12 months, then now's the time that you should, what are you comfortable with when you invest? Don't worry about what someone else is. What are you comfortable with? If something went wrong, and if it did go wrong, challenge the opposite opinion, because you never know. And also, if it did go wrong, how long could you wait for it to go right, if it was to go right? That's the best thing to do. And I think property is a great example, because there's a lot of people that push the get rich quick stuff in property, but they do in everything. But property, the wealthiest people in property become very rich over a long period of time, and over time you generate more income, you collect more income. It's like Monopoly, right? You collect the houses, you collect the income, and every time you pass go, you're collecting rent. And this is the same approach people should take, because nothing that is good comes easy. Literally, there's nothing that gets you rich immediately and instantly. And I think that a lot of people have generated a bit of wealth, or a bit here and there over the past 12 to 18 months because of all the stimulus, and they thought they couldn't do nothing wrong when everything was going right. But soon, if they haven't already, you're going to learn that it doesn't always go right. But it's definitely understand your risk appetite and time horizon, and you won't go far wrong, because your gut will tell you what to do and what not to do.
Brilliant. Lovely put. Well done. Okay, so to wrap up, where can people get hold of you, Dee? Like, are you still running the 5 a.m. club?
Yeah, still do it. We're on tomorrow. Either go to jointhefivamclub.co.uk or follow me on Instagram, D_Ludlow. They're probably the best places to keep up to date with what's going on.
And
Brilliant.
not one of your fake profiles, mate. They made up as well for you.
Yeah, exactly. Make sure you put in the show notes my real one.
Well done, mate. Thanks very much
chat.
for joining us again. It was a great chat.
Great chat. Love it as always, man. Thanks very much.
So, guys, I hope you enjoyed that chat with Dee Ludlow. Myself and Nick always do, don't we? We get a good conversation that flows really well, and there's always a huge amount of value that comes from them.
Absolutely. As always, guys, share us on social media, take a screenshot and tag us on Instagram, and we will look forward to speaking to you again on the next podcast.
Thanks a lot, guys.